Bookkeeping and record keeping basics. Proper bookkeeping is important to sustaining and expanding a business. Without it, you run the risk of hitting cash flow crunches, wasting money, and missing out on opportunities to expand. The purpose of bookkeeping is to help you manage your business and to enable tax agencies to evaluate your business activity. While it is essential to retain a thorough knowledge by reviewing your books frequently, an accountant or bookkeeper can free you up to concentrate on expanding your business. Even a bookkeeping task that takes up to a few hours a week may be better relegated to someone else if that time can be better spent. The following is a list of basic records need to be kept by a small business. Number 1, revenues and expenses. Your business will use either a revenue and expense journal or a ledger to keep track of how much money is going out, where it is going, and what is coming in. If you allow anyone else to handle your books, be sure you review them regularly. That's very important. Secondly, cash expenditures. Cash spent in your business needs to be accounted for if you want to record all business expenses in a given year. There are at least 2 ways to do this. Write yourself reimbursable checks or keep a petty cash record. If you choose to pay yourself back with a check, monitor cash receipts and total them depending on your volume of expenses. Alternatively, you can keep a petty cash record by writing a check to petty cash and keeping a log of each expense paid out of petty cash. Thirdly, inventory records. Keeping on top of your inventory records will enable you to prevent pilferage, keep inventory holdings to a minimum, and track buying trends, among other things. The crucial inventory information you need to capture is date purchased, stock number of item purchased, purchase price, date sold, and sale price. Number 4, accounts receivable. If your products or services are paid for at time of delivery, you will not need an accounts receivable tracking system. However, if you provide services or products for which people pay you at a later date, your accounts receivable records keep track of what is owed to you. Either way, the information you need to capture includes invoice date, invoice number, invoice amount, terms, date paid, amount paid, and the name of the entity being billed. Finally, accounts payable. Accounts payable are debts owed by your company for goods and services. Keeping track of what you owe and when it is due will enable you to establish good credit and hold on to your money as long as possible. You should retain the following information about accounts payable: invoice date, invoice number, invoice amount, terms, date paid, amount paid, balance if applicable, and clients' names and address.